Harmony 1 update.
Let's get into it.
So today, guys, we'll be taking another cheeky look at Harmony 1. We'll be taking a look at the Fear and Greed Index, Bitcoin's dominance. We'll be taking a look at that all-important Harmony 1 chart, seeing exactly what is being going on with the one coin and the price action of one. What is likely to happen, and at least in our opinions, and where things could potentially go in the future. If you find this video useful and informative, do go ahead and hit that like button for us. We both really do appreciate it. And of course, if you happen to be new to the channel and you want to stay up to date with those new cryptocurrencies, hidden gems, technical analysis, and news, then go ahead and subscribe. By subscribing, you will be kept up to date with absolutely everything we do here. It is free, you'll stay well informed, so why not? Right, Chris, anything else you'd like to add before we jump on down and get right into everything Harmony 1?
Just, yeah, don't forget you can jump in the pool and make a passive income. You know, if you're not delegating your Harmony 1, then, you know, there's a really good, you know, annual return of around 11%, which is phenomenal. So, yeah, jump in the pool. You can do that using the ticker Cheeky1.
Fantastic. Yeah, do check it out. Get those juicy rewards. Right, let's jump on down, Chris, and start taking a look at what's going on here with the Fear and Greed Index to start with.
Let's do it.
Fantastic. So, guys, the Fear and Greed Index, this basically shows us how much fear there is in the space. Right now, we actually have a rating of 21. This is a generalized Fear and Greed Index, which basically tells us that the entire crypto space has extreme fear currently. Rating at 21, which is slightly lower than it was of yesterday, which had a rating of 27. So, more fear today than there was yesterday. And I think that represented across the field pretty much, with most of these coins actually starting to decrease a little bit after finding some upper resistance. Last week, obviously, this was down a little bit lower at about 19, which shows us, again, extreme fear. Obviously, prior month was actually okay, pretty green, and there was lots of greed. So ultimately what happens here is you buy the fear and you sell the greed. That's kind of the way that it goes. I think there's a little analogy somewhere down at the bottom here. Extreme fear, it can be a sign that investors are too worried. That could be a buying opportunity. When investors are getting too greedy, that means the market is due for a correction. So ultimately, we can see that last month it was greed, and obviously then we have this extreme fear. So again, obviously use this in conjunction with your charting and all those other good things, and it gives you a good idea as to maybe it's fear that you want to buy and maybe it's fear that you don't want to buy. So in my opinion right now, this is very much still a bull market, and we'll get into why that is in a moment, and, you know, ultimately why I think this is the kind of fear to be buying. And again, even in a bear market, or if this was a bear market, you can still make pretty good returns. You just have to trade differently. And as we enter a bear market, we will be, you know, shifting our focus on this channel to accumulation and going through new crypto projects, new cryptocurrencies, new hidden gems, and using different techniques to basically you know, accumulate large positions for the 2025 bull run, which in my opinion will be the biggest bull run that this space would have seen to date. So really looking forward to the bear market in some regards. Obviously, I don't wish the bull market to disappear overnight. So there is still more to come in the bull market, but yeah, we're getting closer to the end. You know, this is a fantastic year for seeing some significant gains. And when this does peak out, we'll let you know, because we're going to be flipping straight into accumulation as we start to dollar cost average into some fantastic projects, find new cryptocurrencies, new hidden gems, and get into all of that good stuff as well. So when there's fear like this, we do want to buy it, and we continue to buy the fear on upward trends, which is where we are. And ultimately, when that bear market comes in, we'll let you guys know, because we've got some interesting stuff to go through with you guys. Now, the other thing to bear in mind is when you actually sign up to 𝗖𝗢𝗠𝗠𝗘𝗥𝗦, I'll put a link in the description for this one. This one actually gives you individual cryptocurrency fear and greed indexes. So you can actually get into each of these specifically and find out just how much fear there is for each of the cryptocurrencies. So rather than just using a generalized fear and greed index, you can actually find your cryptocurrency. Let's take Cardano in this case. And you'll actually be able to find out how much fear there is in Cardano. And here you actually have a rating of B1 for Cardano's Fear and Greed Index. And this actually tells us that there is not that much fear when it comes to Cardano. So obviously we have extreme fear in the entire crypto space from a generalized fear and greed index, but yet when you lose 𝗖𝗢, you actually get a more bespoke look. And this is AI-driven, machine learning, all that kind of good stuff that basically derives these ratings based on trading patterns and stuff like that in the background. So the algorithms are very complex, but what they do drive out is a more meaningful fear and greed index specifically designed for that cryptocurrency. So here we actually can see that there is not that much fear when it comes to Cardano. So it's always good to get a good understanding of not only the broader space, but also those individual cryptocurrencies. Okay, so the next thing we're going to take a look at, guys, has to be this one. This is, of course, Bitcoin's dominance. And where we are right now, just over here, is something that we've seen in the past. This is basically Bitcoin's dominance dropping from around 60% all the way down to about 39%. Okay, and it bounced from here and actually has started to increase again. And recently, we're actually hovering around 43.2%. So Bitcoin's dominance represents how much of the entire crypto space is actually dominated by Bitcoin. And this is an important measure because ultimately, as most people are aware, the market tends to follow Bitcoin. Okay, so Bitcoin drops down in value, then the altcoins will drop down in value. But obviously, Bitcoin has a significant portion of the crypto space, and more money is actually rolling out of the altcoins faster than it rolls out of Bitcoin. Or generally speaking, Bitcoin is seen as a bit of a safer cryptocurrency than the altcoins, and therefore, if an altcoin were to drop down, they might go ahead and remove their funding from an altcoin and throw it into Bitcoin as a bit of a hedge, right? So this is how you kind of see that Bitcoin's dominance rises, right? Money comes out of alts, goes into Bitcoin, or it leaves the entire space altogether. In the case that we've gone down from $2.5 trillion to about $1.6 trillion, it doesn't leave equally. Ultimately, investors or institutional grade investors potentially leaving their funds in Bitcoin, whereas retail investors are panicking and selling their altcoins. Okay, and what you end up with here is basically money leaving the altcoins faster than it leaves Bitcoin. And this is what this chart represents to us, okay? So right now we know that we came down to 39. We had the Bitcoin correction pull down and loads of panic in the space. The bear market had come in, if you will. That was the narrative that we were spun. And as a result of that, Bitcoin's dominance actually started to rise, okay? But this is not uncommon because this is exactly what we saw over here back in 2017. In fact, June of 2017. Now, bear in mind that we are the 28th of May today. This is not too dissimilar to what happened back in the previous bull run. Okay, so we came up from the high area, we came all the way down, this time to 37, so just 2 percentage points difference. And then we started to see Bitcoin's dominance rise again. And obviously, again, in that time of in that bull run, it was very much oh my God, the bull market is over. That narrative was also there. A lot of this FUD actually is kind of just repeated constantly year on year on year. And you see this with how many times China or India have banned cryptocurrency, right? There's nothing new there. It's just old news regurgitated over and over and over. So ultimately what you're doing here is you're looking at this history. You're saying, okay, yeah, we came down to 37, percent during the 2017 bull run. We bounced up here to about 51. We had a bit of a pullback, as in altcoins started to get a bit of a rally. Bitcoin's dominance rose again, and then the altcoins actually peaked at went completely parabolic. And Bitcoin's dominance dropped all the way down to 32%. So where we are right now is actually heading up towards that 50% level for Bitcoin's dominance. And then I imagine that we'll actually have a small pullback where altcoins will get some leverage and ultimately get some traction. And then we'll have another another Bitcoin dominance increase as it heads up towards 60%. And I believe this will be then when we ultimately have that parabolic move for altcoins and everything kind of tops out here and Bitcoin's dominance drops right the way back down to 30%. So again, I think it's going to be something very similar to what we've seen in the past. History does have a habit of repeating itself, of course, until it doesn't. I'm always open to the fact that it may be something new. There seems to be a bit of a hybrid difference here between this correction, the 2017 correction, and the correction of 2013. There's probably a hybrid between the two. We have obviously got more cryptocurrencies in there, so it's not going to be exactly the same. It's not going to mirror it perfectly. We're already 2 percentage points difference this year than we were in 2017. My point here is it's going to be quite similar in some regards. We are going to see Bitcoin's dominance increase. We'll also see Bitcoin's dominance decrease sharply as we actually peak out in the bull run. So this first move is very much what we saw here, and then very much we'll be looking to move this up and then drop it right way back down as we actually peak the bull run. So the bull run for me, in my firm opinion here, is that it's not over. We are just in that corrective stage that we've seen year on year. We see it all the time during these bull runs. Nothing moves up in a straight line, guys. You do have corrections. And then we have a look at the Harmony 1 chart. Now, there's a few things going on here, so it's important just to break this down in a little bit more detail. First things that I've drawn up here, I've actually pulled this up into a weekly view. So this weekly view gives us a bit of an idea as to what the macro view is looking like for Harmony 1. It's important that we actually do this because a lot of people tend to really focus in on the hourly charts, the 4-hourly charts, and maybe the daily charts, but they don't actually take that zoomed out approach to say, okay, where were we? Where are we now? And what does it look like the things actually, doing going forward, right? So when you actually have a look at this at the weekly level, you can see quite clearly there's several waves, right? You can see wave 1 here, moving from our ground zero here of March crash 2020, all the way up to the peak here of the 10th of August. Okay, on the 10th of August, we saw wave 1 complete. We had correction for wave 2. Wave 2 was about 50% of wave 1. Usually, typically, this is actually a 50 to 60% correction on wave 1. And then we go into wave 3. Wave 3 was then your largest wave to date so far, and usually is the biggest wave that you have. And this actually goes up all the way up to the 22nd of March, where it peaked out. Now we're in correction 4. Now correction 4 or wave 4, this actually comes in usually about 40% of wave 3. Okay, so those are the general rules when it comes to an Elliott wave. Now, we could possibly have actually bottomed this out already, and it would actually be in line with about that 40% correction. But obviously, as always, sometimes this crypto space likes to throw a couple of curveballs in, and it is still possible that we could drop down and set a lower low. With that being said, I do find that highly unlikely. It's possible, of course. I think the probability of it is lower. But with that being said, there's a couple of other things on this Harmony 1 chart that we also need to pay attention to. One is we have this upward trend line here, and we also have this upward trend line here at the bottom. Now, we're actually inside this channel for quite a significant piece of time, where we can see that we actually started wave 1, we found that wave 2 actually connected those 2 points together. We also see that actually just before our March crash of 2020, we have a couple of data points up here that connect to wave 1's peak. And also we had a breakout event just here where we back tested on this and showed it as another area of support. So right now we actually turned this resistance trend line into a support trend line. And what's interesting about wave 4 is we have the potential to drop back down to this support line and actually continue and confirm that that is the support line, which means we haven't actually found the bottom for Harmony 1. And of course, there are those extremes in this, in terms of Elliott wave theory that you have to also pay attention to. One is that wave 4 cannot cross wave 1. Okay, so wave 4 could never drop lower than or cross over wave 1, right? So there's an absolutely theoretical low point of 1.4 cent. I don't think that will ever be the case, but it's good to know that there is a theoretical limit to how low wave 4 could go. If it drops any lower than that, then it's not an Elliott wave at all. You'd have to scrap all your analysis, and there's something else at play here. I don't think we're going to get anywhere near 1.4 cent, but I've put it on there just to make sure that we're all aware that there is that lower limit. I think we're more likely actually going to drop down. If we are going to have a lower low, we're going to drop down to our upward trend line here, the previous resistance flipped to support. I think this is the one that we're likely to fall back to, and the longer that we stay away from this line, the higher we're likely to be in terms of pricing, and the more likely it is that we won't set a lower low. So it's important that we monitor this trend line, monitor the current position, and see how that plays out. We also have a downward trend line. Okay, this is following wave 4. At the top here, we have the peak of wave 3 connecting to the high points just before Bitcoin's crash here, which was obviously a downward trend. These things actually coincide with towards the end of the year, at the end of November, beginning of December, they intersect together. So this could be the point you actually have a true breakout event happen, and you see things absolutely go parabolic. Now, it could happen anywhere along this journey, but we know there's a theoretical limit when it ultimately should have happened by. So by November, we know that we should be theoretically outside of this downward trend. And that does not sound very brilliant news considering we are only at May at the moment. I think it will happen much sooner than that, but it's good to know that there is a theoretical, again, limit on time as to when a breakout should happen by. And we also have a theoretical limits on where we potentially could drop down to if that were the case. So right now, I do believe that we are in wave 4, and we get to see the moment in time where we actually go ahead and break up into what will be wave 5. And wave 5 would be, taking this thing upwards of the dollar level, right? So significant gains can be made here on wave 5, and that's the parabolic move that we'll be looking to kind of complete by the end of the year, beginning of 2022, at the end of the bull run. So right now, everything here is kind of textbook, right? We can kind of see that there's loads of fear in the space. We know what's been going on there. We know how Bitcoin's dominance is running, and we also know this macro view for 𝗲𝗂 and how it's currently performing at scale, right? And again, we can take a look at this thing on the more, tighter timescales. We can take a look at it at the daily, and on this daily chart, we do have our little box over here. This is the area of major resistance for us at the moment in terms of 𝗲𝗂. And this is really all around just below the 786. And this 786 Fibonacci retracement zone is the key area that we absolutely categorically have to get above and get a closed candle above it. Okay, and getting that closed candle, ideally a weekly close, so on Sunday we want to make sure that we're above it, that will basically give us the biggest bull flag to say that we're going to be moving on up out of this downward trend. With that being said, there's such resistance there, it's very unlikely that we're likely to do that this week. Okay, I think there's probably more downward trend to happen until we actually get the enough momentum to push on through this particular area of the 786. So my expectations are for the weekend ahead that it will probably be a pretty negative weekend. I think there will be lots of selling pressure potentially, and I feel Bitcoin is the one that's going to be driving that narrative, right? So whatever Bitcoin decides to do this weekend, it will basically affect pretty much all these altcoins. Now, I don't say that to scare anyone. I say that just to be quite realistic with everyone here, that ultimately my expectations are that there's a bit more, there's a lot of resistance up here. I don't think we're likely to break through the 786 this week. So therefore, there's more likely that we'll actually have a more downward trend. And following that, there's the 200 moving average just here seems to be a good area of support. If this continues to rise, then we should start to see a good bounce area here, actually higher than the previous low. So as long as we don't go ahead and set a lower low, I'm still be pretty comfortable. And likewise, the longer that we stay above the previous low area here, then the higher the chance that we'll actually sustain our upward trend line longer term. So really interested to see how that plays out. I don't want the price to go down, but I'm also going to be realistic and say it has the possibility of dropping down lower should Bitcoin also do that. So it's important that we just represent what's actually going to be happening in the space. Ultimately, I do think we will eventually break through this 786 area. Ultimately, we might just need to see how Bitcoin reacts this weekend. It is the longer weekend, bank holiday weekend, so we are expecting that traders won't be really paying too much attention. They'll probably be closing their positions, and obviously it's the end of month as well, so there potentially will be a few liquidations occurring. I do find this weekend potentially quite a messy one for Bitcoin and for many of these altcoins as well. So for me, I'm just going to be holding tight. I know there's traders out there that might say if you break your support lines, then ultimately you might want to go and short it. I'm not a trader. I don't give signals. I don't do things like that. I look at the data, I see what I'm here, and I reevaluate my positions. I'm quite comfortable to hold this thing through because, as I said before, if we take a look at that weekly view, the bigger picture here is to go up to that fifth wave, right? So for me, I don't mind hodling this thing. I know I'm kind of leaving money on the table by not trading, but I find trading very stressful. It's very difficult. You're up against a lot of artificial intelligence, a lot of key players in the space. Ultimately, I find actually I like to just purchase on the dip, and basically just dollar cost average my position, and I have a good exit strategy that aligns to my hodling. So I hodl, and when it reaches certain price points, I liquidate certain percentage points of my portfolio on that journey to the upside. I don't like to trade or short or get too involved with short-term moves. I much prefer the longer-term play. As we often say on this channel, we are long-term investors. We see long-term potential, and then ultimately we like to dollar cost average those positions, make sure that everything aligns with our strategy longer term, and we do not really facilitate the short-term plays. We do not use leverage. Ultimately that stuff is dangerous. So we own it, we put it in cold storage, and then when those time comes to liquidate at certain percentage points, we do. So Chris, that is everything I have on 𝗲𝗂 in terms of the technical data and everything that we've seen in this brief update. But is there anything else that you feel that you want to leave the guys with today?
Just, I guess it's how you look at the market, right? And there's lots of messages, people that have sold at the bottom. It's not really for them. You know, we did the member video, just, you know, the best way to sort of exit the market but not sell at the bottom, which we thought was really important to get out.
Which actually is a really important message, isn't it, Chris? Because we've actually seen that play out. So anyone who was paying attention would have been able to execute that exit move if they chose to.
Yeah, and I know that people have. You know, we've been inundated with messages. When you do messages, guys, you know, if you DM us on Twitter, Telegram, Facebook, Instagram, TikTok, like all of the social media platforms, right? We do get back to you. Just bear with us, because it's super busy. The bigger the channel gets, the more questions and support you know, is required for people, right? So we do reply. Just give us some time, and we will get back to every single person that DMs us. With that said, you know, it's how you see the market. So for me, you know, it's important that we got that video out to the members to say, look, you know, here's how you don't sell at the bottom. We've seen that play out. We know that people have benefited from that, which is wonderful. It's why we kind of set up the channel. We wanted to kind of support people. But with all of that said, it is how you look at the market. I kind of see that, you know, this weekend, yeah, there could be sort of a correction, and I think I see that personally as an opportunity to invest and build my position in certain projects that, you know, up till now have been looking like they were expensive in comparison to what we were purchasing at. And Nick and myself got in super early on some of these projects. You know, I think Cardano, we were paying less than 10 cents a coin. So, you know, we got in early. Some of these prices now started to look extremely expensive compared to where we initially got in. Still believe that some of these projects are undervalued, but now there's another opportunity, right? It's an opportunity to build a better position, and you know, I'm looking to take that to my advantage. But you know, I understand that people are nervous and then maybe not as long term as ourselves, Nick. So, you know, you've got to do what's right for you. Don't listen to what influencers are saying and make your investments based purely on that. Go do your own research. And you know, if you've got questions, let us know.
Yeah, no, absolutely. Obviously, Chris, myself, we're not financial advisors. We create these videos to kind of document our journey through this space. And, you know, ultimately, if it helps anyone on that journey, fantastic, right? Because we do a lot of research, believe it or not, into many of these cryptocurrencies. We don't invest in, you know, just anything. We have quite a strict kind of criteria around where we want to invest, and these are projects that have true utility and have a true future. And it's important that, you know, you do that your own research to the similar or not even deeper you know, extent to what we do. And when you do that research, you'll hopefully be able to see some longer term vision as well as these short term opportunities as well. Guys, if you found this video useful and informative, do go ahead and hit that like button for us. We both really do appreciate that. And of course, if you happen to be new to the channel and you'd like to stay up to date with the new cryptocurrencies, the hidden gems, the technical analysis and news, then why not become a subscriber? By subscribing, you will be kept up to date with absolutely everything we do here. It is free. You'll stay well informed. So why not? With that said, done and out of the way, we hope you have a fantastic day, guys, and we'll catch you in the next one.
Yeah, take care.